So blockchain has been a technology for like the last decade, and the financial institutions have never been able to adopt blockchain because they didn't want to share data with each other. So finally, we're coming to a version of blockchain that could ensure privacy for each other. So the banks are getting interested now because they could all get onto the platform for some common interest without sharing their data with each other. The key need to share data is not for the sake of sharing data, it's actually to detect fraud. So for the banks, a typical fraud would be someone finance an invoice with a bank or takes a loan from bank A and then uses the same cargo manifest or the same invoice to go get financing from a bank B. And because bank A doesn't talk to bank B, so they won't know when a fraud happens. And on a blockchain platform, when selected data can be shared and can be requested, as in when a bank invoices the invoice, he has the ability to check if any other, or the platform has the ability to check if any other banks have invoiced that same invoice, financed that same invoice before. That's what the bank gets to gain, more knowledge than the data sharing to a certain extent. Yeah, so primarily it's for fraud detection would be the key benefit from the blockchain platform. Trade finance platform has been a concept for the longest time for banks to share selected data with each other to detect fraud. And because banks are not willing to share data, at one point blockchain could allow limited data to be shared. But even limited data to be shared was uncomfortable for people. Yeah. And therefore, because of this, it's never been successful. Hong Kong MA came in to pull the platform together because no one bank will be able to do that, because any bank that tries to build a blockchain platform, you probably won't get the buy-in from the other banks because they wonder what data you keep for yourself, right? So then Hong Kong MA came in as a neutral party, pulled the banks together with the right technology, the right regulator. I think that's what made it happen. Yeah, and it all started with maybe just one or two typical scenarios that you try. But once you have everybody on the network, a lot of things can be possible. Yeah, so as at this moment, we focus on detection of double invoicing fraud as a first benefit of the platform. And then we're discussing phase 2, phase 3 in terms of adding more things onto the chain. I think blockchain, because has been around for a long time. When crypto came in, things were going up and down for a while. Now, for trade finance specifically, trade finance and supply chain finance in blockchain is where we see a very clear value proposition for the banks, and we're seeing the adoption going up very fast. So we started work on the Hong Kong trade finance platform last year. It took us 6 months. We started in March. It took us 6 months to go live. So in September 2018, the platform went live with the first 7 banks in Hong Kong. Now we're into phase 2 and there are 13 banks. So the adoption is that fast. Within a span of from going live to now, which is only 4 months, 3 months or 4 months, yeah, we've added another 6 banks. I think the technology itself is not so much of a hurdle. Banks are starting to realize how important technology is, right? So financial institutions want to become technology company and have a tendency to be more open to technology. I think what is probably more difficult and require more focus is the process, is the business process, the stakeholder requirements, getting everybody to agree on things, that takes time. So I would think one mistake would be maybe when a bank wants to adopt technology, they may have underestimated the change management of processes and people within their company, and that probably is one common mistake that more focus can be put on. I'm very happy that the technology has proven its value proposition after so many years. And to a certain extent, we don't have to use blockchain for the sake of using it. So I feel that more and more use case will spin up on blockchain. People will be more keen to experiment in new areas that they previously maybe a little more skeptical to. So we should find more and more use case that's of good value to consumers, to the banks, to financial institutions overall. That would probably be the expectation to a certain extent. But there will be scenarios that blockchain cannot address. They're not a solve-all. Every new technology has its pros, has its cons, right? So I think it's an interesting one. We've yet to discover new things on blockchain. So I'm also excited to see what's going to come out next. At this moment, I bring what is of proven value to the banks, because I think for the banks there's a small experimental part. I would love to experiment on small other things. I would like to really prove the value of what they're using today, which is on trade finance and supply chain finance.